do see these risks as being elevated. It starts with different kinds of exposures, more accumulating exposures, for example, in ports or in overflow areas that we've been using in lieu of port areas being available. We're also looking at heightened volatility of a number of drivers. And then, of course, if we're looking at recent large events, such as the collapse of the Baltimore bridge, we're looking at huge impacts on supply chains, only a fraction of which is probably insured. So all of these considerations that we are taking in account and that we're working towards getting a better grip on as an industry. To me, it's really remarkable how over the last few years we've seen what I would say within insurance and reinsurance is a real evolution in terms of how we're thinking about scenarios. So traditionally, I think we very much looked at silos, individual line of business peak exposures. And now more and more we see a number of these scenarios highly interconnected, where you could have something that, for example, is a natural catastrophe or a cyber attack or a power outage or something that happens on the geopolitical scale that then has effects into other areas and triggers movements that we need to look at and that we need to treat as one scenario that runs across a number of impacted areas rather than just one in isolation.